Welcome to this Ethereum video where we will be unpacking whatever just happened in the past few days by looking at some price predictions we have. We will give you exact targets and exact points we are looking for. We will be looking at some of this data and also Elliott waves as we always do. But let us start right into it, and I will just zoom out for you so you can maybe see the bigger picture because, well, let's just say it like this. Things have changed. Things are not the same as they have been in the last video because we saw this huge dip to the downside, and this is taking away all of the structure we had on the chart. This doesn't, of course, mean it's wrong. It just means that now we have to look at different scenarios. Well, now the old one is wrong, yes, but it doesn't mean that we did anything wrong. It just means that there is a new structure available now. So let's look at this. And of course, as always, it's not financial advice. It's just our opinion. By the way, if you want to learn trading, we are giving away our trading transformation system for free to one person per week for the next 3 weeks. And all you have to do is subscribe to this YouTube channel. And after you've used it and after you've done everything with it that you can do, is give us a testimonial if you enjoyed it. And well, basically just tell us how you liked it. And all you have to do to enter this is basically subscribe to our YouTube channel and send to our email, which you can either find on our website or it's also in the description, your YouTube channel, so we can check you subscribed. And well, if you're lucky, you will be selected and you will get our trading transformation system, which has a value for $140 for free. We think a wave 3 has stopped here somewhere in March of 24, and since then we've seen an A wave to the downside, a B wave to the upside, and a C wave to the downside. Now you might say, well, how does this make sense? A C wave is exactly as low as the A wave. Does that even make sense? Does that even work? It does. This is the minimum target for a C wave, which is reached now. It is possible because B wave was overshooting, or at least quite high, and it's not a pretty structure, I have to admit. It would be better if we would see another low. However, I'm sort of, well, a bit careful because if we lose this $2,000 mark, it's not looking good. You can see it was tested here once, here once, here once. So 4 times. It's strong support. If we lose this level, then we're in a, I mean, we might go into the next Ethereum bear market. That's not... we shouldn't just not think about that. That's entirely a possibility if we lose that level and if we, well, substantially lose it. But let's be optimistic for now and let's just assume that the C wave has finished and now we're starting a new move upwards. It would basically be looking something like this. The exact price targets, turning points, and where we are buying we'll get to in a second. Let us first look at this as always, and I will draw from the local low, and for that I have to zoom out quite a bit, lines for visualization. You can see here local low on 3rd of February, so just days ago. Since then, price has gone up. I think that's, well, quite obvious. For open interest, I have to adjust the chart a lot here. I can't even adjust it that much. I will just put it here. You can see if I go up here, we fell by a lot, like this. Open interest has fallen a lot. So we can conclude price increased, open interest fell a lot, right? Also, spot volume has also decreased a lot. Now, most interestingly, which allows us to interpret basically what is happening up here, what happened to the funding? Well, and I have to zoom out even further once again. It is crazy the amount of action we're getting on the chart in the past few, well, basically weeks and also months. Funding, while being very close to being 0 or negative, which is very, very good. It means the market is not overheating. It means longs and shorts are very, very well balanced. We want that if we want to see higher prices. Funding has been rising, but only slightly. It's minimal. It's basically hovering around 0. So it basically means prices are increasing and there's a lot less leveraged positions in the market, which is good because that means it's not as overheated. It's not a necessity that we liquidate those positions because there's too many leverage positions in the market. This is very good for, well, a healthy move to the upside with potentially even spot buying, which we're not seeing now, but we want to see if we're looking for a sustained pump to the upside. Let us look Elliott wave wise structure, what exactly we're looking for. So As you might know, we have done a video on this, on how to use Elliott waves for trading. If you want to, feel free to check it out. It's on our channel in our How to Trade or Learn to Trade playlist. We can't know when the wave 1 is finished. It looks like it might be still the wave 4 in the wave 1, and we might get another high. We don't know for certain. What we can look at, however, is how deep a wave 2 might go if we see it. And this is basically where we want to buy. We want to buy because if this truly is discount, then we have a really good risk to reward ratio. We just have our stop basically below the low, because if we break it, it means the structure is, well, the C wave is not finished in that case. And what we can just do is we look at the support box for the wave 2, which is between 2.5k and 2.3k. And what we are going to do is we will have a long order waiting down here, and a stop loss being around, let me draw it properly, yeah, somewhere around this level. So below $2,000 is where we will have our stop loss. So the risk is not very high, because, well, basically you can only drop like 13-14% if you do it a bit more tightly. I don't want to give exact price levels because I don't want people to just blindly copy our trades. That is not a good idea. That is not what's going to make you a profitable trader. But you can close that gap maybe to 8-9%, and that is a very good risk to reward ratio, because, well, if you zoom out and this scenario does play out, then to new all-time highs and somewhere close to the minimum price targets, it's like 100%. And easily more than that. Some people are calling for like 300% higher prices from this point. That's a bit excessive in my opinion, but I mean, there is a lot of upside potential still on this chart. And I'll go in 4 hourly back so you can see it more clearly. Basically, that is what we're looking out for. We're looking for prices to, well, consolidate here, maybe go a bit further upwards, then dip somewhere into this area where we will be buying. Of course, this support zone can be adjusted if prices move higher, and it will be. And, well, basically, if that happens, we're looking for prices to turn around into this wave 3, which is going to be impulsive. If that doesn't happen, if we break this level and lose 2,000, then we have to look at an entirely different scenario. And then we're probably still in the wave C, yes, and it's going to go even lower, and that's not going to be pretty. If you enjoyed the video, make sure you comment, like, and subscribe. And, well, maybe share this with someone who might be interested. I will see you in the next video. Bye-bye.